He's a self-made billionaire. He ran for mayor, and now he's on the radio. Welcome back to the Cats Roundtable with John Catsimatidis on AM 970. The Answer.
I watch her every night. She's a really Addison. Maria Bartiromo. Maria Bartiromo. Maria Bartiromo.
Welcome back to the Cats Roundtable, 970 AM The Answer. I'm your host, John Catsimatidis. Thank you for spending every Sunday morning with us between 9 o'clock and 10 o'clock. Maria Bartiromo grew up in Brooklyn, graduated at NYU, 20 years with CNBC until Fox Business News paid her $1 zillion to move over and create the news show, The Opening Bell. The first person on the floor of the New York Stock Exchange to broadcast. Maria, welcome. What are you doing this Sunday morning?
Hi there, John. Thank you so much. Listen, I don't know about this $1 zillion that you just mentioned, but I am very happy to be at Fox. I love it here. This morning, I'm talking with Congressman Paul Ryan. We're going to be live with him on Sunday Morning Futures at the top of the hour at 10 a.m. Eastern, and then we're going to be following up on that with an exclusive interview with Larry Summers, the former Treasury Secretary. So I've got a busy morning just like you do, and we are talking about all of the threats out there and what has been driving the stock market absolutely bonkers.
Well, I mean, we've had roller coasters the last 2 weeks, and on Friday the market went up big time. Do you think that the roller coaster is over?
No, John, I'm afraid it's not. I think right now what you have going on are people saying, okay, we had a huge sell-off last week. Let me look for some opportunities. Let me, as they say, buy on the dip. But the fact is there are so many worries out there because of an economic story that is very much mixed at best. Here's what's going on. You've got Europe really weakening right now. So Germany is showing some very weak data on the industrial side of things. Sentiment, morale is plummeting in Germany. Italy is officially in recession. France is in recession. So Europe has worsened over the last couple of months. As a result, the worry is that that's going to impact the U.S. That's our largest trading partner. We're right at the beginning of the third quarter earnings season, so the worry is that all of this weakness happening in Europe is going to impact corporate earnings, and you know that corporate earnings are the really fundamental backdrop of the stock market. Add to that China. For the longest time, all we talked about was China and how it was going to be the growth engine for the world. And actually, what has happened is China has slowed quite considerably. It's gone from an economic growth number of 11% all the way down to 6%. Now some people are arguing that we could see China grow 3%. That's a big deal. At the same time, the U.S. economy seems to be stabilizing, seems to be coming back. But these outside threats that we cannot control are definitely unnerving investors.
Well, I guess in the last 6 months we had ISIS that nobody ever heard of, and it got created. We had problem with Hong Kong. We had problems with Ebola. So there's problems creeping up all over us.
Exactly. And that, of course, when you have situations where you've got these situations where we didn't know about them and they're creeping up all over the place, that impacts sentiment. That impacts people's desire to go out, to spend money. And, the consumer is two-thirds of the economy, okay? It represents retail sales is two-thirds of economic growth. So if you're going to have people worrying about all sorts of things from ISIS to Ebola to the global growth story, of course that's going to dictate their behavior. And they're going to basically say, well, I'm not going to go shopping. I'm not going to spend a lot of money. I'm not going to buy that big-ticket item like a house or a car. And as a result, it's a vicious cycle. It all impacts the next thing.
Well, the only good news on that is that interest rates will stay low way beyond 2015, which they've originally been predicting.
That's absolutely right. And, last week what we heard happened was James Bullard, one of the Federal Reserve officials, came out and said, look, if things continue to weaken, maybe we should consider more quantitative easing. Now, as you know, the Federal Reserve is supposed to be out of this, bond buying program this month. And so as the Federal Reserve is exiting its quantitative easing or this bond buying program, now you're hearing a new debate on whether or not they have to start a whole new bond buying program, or quantitative easing 4 or QE4. So now that that conversation is out there, people are saying, okay, obviously, if the economy is not going anywhere fast and we're sort of bumping along the bottom, partly because of what's going on around the world, the Federal Reserve is not going to move on interest rates. And if they're not going to move on interest rates, you're not getting any return anywhere else on your money, anywhere, except stocks. So once again, you have to look at the stock market and say, for the long term, I'm talking 10, 20, 30 years, the stock market is going to be able to give you the best returns anywhere other than, your own home.
I agree 100%, Maria. Tell me about the price of oil. Who's shaking it up, and who are we punishing?
Well, look, the price of oil has plummeted, which has been really a big surprise. Oil prices, I believe, are down about 15% this year. And basically what you have going on here is a real mentality, an understanding by most Americans that America will and is becoming an energy exporter. Okay? We already export natural gas. Now we have this crude oil ban in place. That will likely be lifted. And so at some point the U.S. is going to be an energy exporter. And frankly, people say there's enough oil in the world. When you look at the global market of oil, you have to really look at it as that, a global market. It's not just about the U.S. China is consuming an incredible amount of oil. India is consuming oil. So it's really a global market. But there is, in fact, enough oil in the world. I think what's happened is the Saudis have figured out that the shale revolution is real, and the U.S. has an unbelievable opportunity to create jobs and to get more product, shale gas, from its own shores. And as a result, the Saudis are saying, well, if that's the case, the U.S.'s relationships changes dramatically with the Saudis, with the Russians, with anybody that we've been buying oil from. And as a result, OPEC is saying if we push prices down, that will put a lid on all of these efforts in America to get gasoline and get shale oil. And so it feels like the Saudis are limiting, and OPEC is limiting oil production, limiting the amount of oil that is coming into the market so that prices come down, and the U.S. gives up on the shale fracking revolution. I don't think that's going to happen, but when you said to me who's playing games, I think you're right. I think there is a game being played. I think OPEC is trying to control prices like it always has. They're pushing prices lower so the U.S. loses interest in the shale revolution, and that's not going to happen.
Well, when I was on your show, I think one of my predictions was, and what I was pushing, Independence Day 2020, that if we have the right administration, by 2020, North America could be completely independent.
Absolutely. You said that. You were absolutely right. I agree with you. I think that, the U.S. being an independent producer and having, not to rely on some of these outside actors would be the best thing that the U.S. could do. Not only that, but let's remember, when you are actually getting the product from the ground, when you are doing fracking, this requires certain skill sets and certain training which warrants higher salaries. So not only are you creating thousands, tens of thousands of jobs from the shale revolution, but those jobs are also higher paid than other jobs. So it's a good situation for Americans, not just because we are bulking up our own oil resources, but we're actually creating jobs that pay Americans more money.
I have some breaking news for you, and I don't know if it's public information yet, but Canada is shipping a ton load of crude oils straight to Europe.
Yeah.
They're trying to even expand those resources.
Exactly. I mean, look, Canada realizes they've got an enormous opportunity here. Why do you think Canada is trying to negotiate with the U.S. to get the second part of the Keystone Pipeline built? And unfortunately, we're mired in politics, and, we are pushing off the decision to get the Keystone Pipeline up and running until after the midterm elections, whereas, the opportunity is now. So the question now becomes, is Canada going to rely on China? Is Canada going to send all that oil that it has from, its resources to India? Frankly, why wouldn't they? They know what they have. They've got this product. They want to send it to the U.S., through the U.S., but we are playing politics and making believe that we don't want Keystone because maybe some voters don't want it. And what are we doing? We're losing an opportunity. Well,
Maria, thank you so much for being with us this Sunday morning. You're one of the brightest ladies I know, and it looks like we're going to have low interest rates for the rest of the year, and our companies are doing well. And you're a great lady. I'm glad I'm not competing with you, and you go on what time?
I'm on on at 10 a.m. this morning, Sunday Morning Futures on the Fox News Channel.
Well, I'm going to be watching you at 10 o'clock, and I'm glad I'm not competing with you, and thank you for being with us.
Thank you, John. I'll talk to you soon. Great to talk
Take
to
care.
you.
Bye-bye. This is John Catsimatidis. We'll be right back to you after these messages.